Hello, Traders Greg here with a market update. Okay, so there's a couple of things happening in the market at the moment that are weighing on risk sentiment. And now the first one is what's happening in the Middle East with the Middle East geopolitical tensions. There were reports overnight that the Israeli Prime Minister Netanyahu and his head of defense have actually agreed on a plan on their retaliation on Iran. So that is actually now being finalised. The US has actually also shipped in some extra air defence for Israel and some soldiers to operate those defence systems. So look, they're basically ready to go now. It's just a matter of when, so timing. So I'd suggest that with the election just a couple of weeks away, that this will not happen on the eve of the elections. So it will probably happen sooner rather than later. And so I'd imagine there's maybe a very good chance that it could happen this weekend. So what does that all mean? Obviously, look, you can't be short gold. Gold in the last couple of weeks has been range trading, 26.20 to 26.60, most of the action that we've seen. And it's been sitting in a waiting room, and it's obviously been waiting for this. So look, I'd imagine when we do see the headlines, and we've said this before, that we probably will see gold gap up, and we'll see it go through those record highs of 26.85 and through 2700. So just depending on how bad these attacks are and what the retaliation is, will dictate how high gold targets. Now, just on this. Further on this is that there's been lots of reports as well that Israel would not target Iran's oil reserves. So we've seen actually crude sell off quite aggressively this week. It's actually sold off 12% from its recent highs. And we're opening Asia today down near $70. So look, I would take these reports on what Israel may do, may not do with a grain of salt. And furthermore is that we don't know how Iran will respond to the attacks, whether or not that they've actually stated before that they may attack oil reserves in the region, and there's also a school of thought that maybe they may even go as far as closing the Strait of Hormuz. 30% of oil reserves go through that strait, so if they did do something like that, that would spike up crude very quickly up towards $100. So look, I would not be chasing crude down at these levels, selling it. I think that I'd suggest that I'd be cautiously bullish. Crude anywhere below $70 in current levels. Okay, so moving along. The other thing that's sort of weighing on sentiment at the moment is China. Obviously, the Chinese authorities have done everything possible to prop up their economy and prop up their markets. And, look, initially this did work, and we did see, the Chinese markets, rally exponentially. But a lot of disappointment has crept into the market. And the reason for this is the market, wants to see some, fiscal stimulus. They want to actually get details on fiscal stimulus. So, the size of it, when they can expect it, and exactly what it may look like. And unfortunately, the Chinese authorities have been very vague on all of that. And until the market actually, I guess, hears some specific details from China, I'd imagine it's going to be very hard for Chinese markets and related markets like the Hang Seng, to make any further gains. And we probably will still see. The sellers topside capping those markets. So look, I certainly wouldn't be chasing any of the Chinese or Chinese proxy markets at the moment. So moving along, last night, overnight, we saw US markets down for the first time in a while. So S&P was actually down 0.7%. And we actually saw one of the big market leaders, Nvidia, actually down almost 5%, down at around 4.5%. So look, there was reports out that maybe the US government may limit, Nvidia's chip sales overseas, so that they can, keep their technology dominance in the US. But with US markets, look, they have had a phenomenal run. S&P did make 46 record all-time highs so far this year. And seeing a little bit of a correction obviously is it's not a big deal, but I think that, look, markets hate uncertainty. With only 2 weeks left before the election, and obviously what's going on with geopolitical tensions, etc. I think maybe we might have seen the highs for US markets for the time being, and look, I'd bias now would be to the short side, until we get through a lot of this uncertainty that obviously is coming up and is also part of the market at the moment. Okay, so data-wise today in Asia, we have New Zealand CPI, offshore we've got UK CPI as well, so they're the big data prints today. So if you are trading the Kiwi dollar or sterling, you should watch out for those, because it will dictate obviously their respective central bank decisions for their next meetings. But tomorrow's a big data day to close out the week. We've got locally here, we've got Aussie employment data. Obviously if that's good data, you can forget about any talk of rate cuts before the end of the year, and earliest we'll probably get them early next year. But if that employment data tomorrow does disappoint, no doubt we'll hear a chorus for maybe a December rate cut, and probably see the Aussie dollar trade a lot lower. We also have an ECB central bank meeting where the ECB is expected to cut rates from 3.5% down to 3.25%. But for anyone who's trading euro, I guess the Lagarde press conference after the actual decision is probably going to be what you will want to focus on. And finally, tomorrow night we've also got US retail sales, which are supposed to come out marginally better than expected. Anyway, look, I hope you have some good trades to end the week, and we'll catch back with you shortly.